It always takes a second. There we are. Yay!
All right. Welcome, everybody. Welcome. Well,
Welcome. We're so
Jennifer,
excited.
how's your week? How's your week been?
It's been a really good week. It's been a really busy week. Real estate is funny. In Washington, D.C., it's an interesting time where it's just a little bit more busy in the suburbs than it is inside the city, which is interesting because I think so many people moved out of the city during COVID because they just wanted more space and they're working from home. So it's interesting new trends now. What used to be, that's kind of the theme is what we used to know even a couple years ago is not the same. And that's why like today's theme I wanted to ask you about was people, used to think of too big to fail. They're looking for the banks that they can really trust. And, just a couple of weeks ago, we had these banks failing and now they're getting bought out. And I think there's just so much uncertainty. It's making not only the person who wants to put in their personal money, but also somebody who wants to build a business, an entrepreneur, whether it's a real estate investor or just somebody who is even a real estate agent. We're building our own business. So how do we do that? How do we choose the right bank to create that relationship? Because we know it's about a relationship.
Yeah.
It's not a one-time thing.
It's really not filling out an app and hoping it works, right? Well, that is a great question. And it's extremely pertinent to what's going on right now because too big to fail. Good news is since 2008, the too big to fail, which are the top basically 5 banks. You've got Citi, Wells, Bank of America, Chase, and U.S. Bank. There are others. Truist comes in there, number 6 and 7. They were a recent merger last a year and a half ago, right? So these banks have tried since 2008. They ruined their relationships with borrowers because they were calling every possible note due. They were foreclosing the second you were late. They were sending notice of foreclosures because that's what they thought they needed to do. And they had a horrible experience because their inventories, fields and subdivisions upon subdivisions of empty homes, right? They don't want to do that again. So over the last 15 years, they've been working on creating a more positive relationship with borrowers. So the big banks, where we thought we were just a number, they're the ones doing the most work to catch up with where credit unions have been for 40 years, right? Credit unions are that high touch, high feel, high level of experience, but lenders were losing that because of how awful they were in the foreclosure crisis. Well, here comes COVID, and all of a sudden, credit card, not just mortgages have moratoriums, not just auto loans, but even credit cards had moratoriums. They knew that if they nurtured the relationship, as a borrower, you had to show up. You had to actually disclose what's really going on in your financial relationship. But they were able to negotiate and not make late payments, even if you weren't paid as agreed. They suspended that portion of the feds suspended the portion of the Fair Credit Reporting Act called Truth in Reporting, so that they could not ruin somebody's credit because the entire world shut down, right? So props to them. So the big banks are too big to fail, and they're the ones gobbling up smaller institutions, community banks, et cetera. Even some of the tier 2 under the top 10, there's another 30 banks after the top 10. And those are always, the big banks will swoop them up whenever it makes financial sense. So too big to fail, plus heavy education and movement on developing relationships with borrowers, make them the safe bet. Now, once you've decided, let's say the top 5 or top 10 of banks, which ones do you choose? Well, in the world of fundability, you want to choose a bank that also has automatic underwriting, meaning fill out a 1-page application and your borrower behaviors get measured just like a credit card, and an approval in 30 seconds, 2 minutes. We want business lending to be at that bank. So if you're an entrepreneur, you're a small business owner, you're a real estate investor, et cetera, you're looking for capital, we choose and train our clients to look at these top 5 banks, these top 10 banks, and then look at what their and choose the personal checking accounts and credit cards, et cetera, based on how generous they are, how good they are at delivering business lines of credit, business loans. So that because that relationship, we want to come to them in relationship building like they've been coming to us for the last 15 years. And that's how we do it. We build those relationships with our personal checking accounts. We build those, and then the best ones to choose are the best ones that you need. And we have an amazing program that goes through what those banks are and how to build those relationships with them. Go to getfundablejennifer.com, getfundablejennifer.com. We have an amazing course that shows you step by step how to build the relationship with a lender. Think of it as speaking their love language, how to literally speak their love language. Do they like chocolates or do they like flowers, right? Do they like trips or do they like cozy nights, cuddle up on the couch watching TV, right? We need to speak the lender's love language, and our course shows you how to do just that and what the borrower behaviors are that are being measured. So that's how I would choose our banks today, and recommend to our collective tribes who are watching this, what banks, top 5, maybe top 10, and do they have outstanding unsecured stated income applications for business loans and lines of credit?
I think that's so good. It's really important because, again, people are so afraid right now. They need to have some stable datum, some very specific things that they can look forward, and really understanding that relationship is going to benefit you long term, especially as you go back with whatever, and I want to say whatever crazy idea. I know we talked about it a couple weeks ago about my friends in Florida who decided to do a snow park in Florida.
Right.
And so many of the banks were were just not receptive. That's the polite way to say it. Not receptive.
Yeah, they were
very successful in business. And so it's one of those things, but once you have a relationship, and that's who funded them, was the bank that had the relationship. So it's about creating that relationship, but also understanding who you're creating a relationship with. So do your due diligence. That's
and that relationship, we've got to make sure we're speaking their language, the lender's language, because different lenders are sensitized to different based on their experiences working with borrowers, right? Everybody has different experiences, just like you in your relationship. You now prefer this type of person in relationship because you had a horrible experience with this type of person. Well, banks have the same relationship with lenders, and we have those, with borrowers, and we've had those experiences with lenders. I'm just here to tell you that they have upped their game. The top 5 to 10 banks have up their game when it comes to reaching out and sensitizing their operations, their people, training their people to be good and kind, or kinder, and more malleable with borrowers.
And, I don't know if I said this to you, but I think it's so important to talk about. I heard it recently called the platinum rule. Have you ever heard that rule?
Not by that name.
Okay, so because it's exactly similar to what you were just explaining. And so you might like this. This might be one you steal from me, because I stole it from whoever taught me. But I thought it was so good because one of the things in real estate I learned very quickly, it was about communication. It's such a basic thing. And, it's funny. I think about, I grab my phone and I so often just shoot off a text message. And then sometimes I email people, and then sometimes pick up the phone and call them. But what I had this one client who got really upset with me for text messaging them. And I was like, I don't understand. Why are you upset? And then they called me and said, why won't you just pick up the phone and call me? And I thought, from my viewpoint, I was being so courteous and so kind by not taking up much of their time, instead of having a whole phone call, which is going to, no matter what, is going to take way longer than a text message. But from her point of view, I was being very rude. And I was like, oh my gosh. So the platinum rule, you've heard of the golden rule, treat others like you want to be treated. So I prefer a text message. It's faster, it's quicker. I can be in a meeting and I can slip off a little, I can sneak a little text message here or there. But I realized that one of the things you have to do is ask, how do you prefer to be communicated with?
Yes.
So not the golden rule, treat others like you want to be treated. I want to be text messaged, but treat them how they want to be treated. So if they want you to pick up the phone and call them, then you need to treat them in the platinum rule.
Treat them the way they want to be treated. Brilliant.
They want to be treated. So think about that with the banks and what you just said. Yeah. It's how they want to be treated, not how we
think we should, how we think we should show up. Absolutely. That's the love language. That's making sure that we are showing up in a language they can understand, right? And that looks like borrower behaviors, guys. Now, remember, we've spoken this before. You're going to learn this at getfundablejennifer.com, but there are 150 borrower behaviors that are measured in the United States banking system. Most of them pick 40 of those 150, but every lender doesn't pick the exact same borrower behaviors. You've got to know, and you can learn, you've got to know what your lenders are using and how they're measuring you. And if you optimize your borrower behaviors, if you optimize all 150, which is the end game for our master course, if you optimize all 150, you don't care which bank uses which borrower behaviors to grade you, because you're dialed in, you're bullseye on every single one of all 150. So critical. That way we can speak their language. They'll measure what's important to them, but we're showing up as conscientious borrowers.
Exactly. Well, Merrill, as always, thank you so much for being here and sharing your brilliance.
Always so fun. Absolutely so much fun. And we will see you next week. I am. Oh, yes. Next week, same fundable time, same fundable channel.
Perfect. Sounds good. Thank you, Merrill.
All right. Be well. Bye, crew.